Hey guys, how we doing? It's Chase, the Stock Sherpa. Today, the Bob Ross of the stock market, turning your market mistakes into happy little trees. I'm feeling excited if you can't already tell. I'm jacked up, the day's over. It is about 5:45 here in Central Texas. I'm gonna use my brand new chalkboard behind me. We're gonna go over my nationally recognized, regionally famous, the Sherpa whiteboard presentations today. What we're going to talk about specifically is CPI. What is it? Let's learn a little bit about economics. This is going to be an economic lesson for you. We're going to show you how it can relate to your trading. I'm very inspired to continue making these videos based on your recent comments and feedback, growing the channel, hopefully helping with the ever bullish movement and helping people to understand that they can manage their own portfolios if they so choose to. They can do it better than the average Joe that gets paid to sell you products. So y'all know the mission, y'all know the agenda, you know the website, everbullish.com, Everbullish Podcast, Chase at Everbullish on YouTube. Bullish on ERX today. Got in, actually already was in, staying in. Clipped a couple profits, a couple losses, all minimal, marginal. Super bullish on ERX, which is the 3-time energy. LabU is making a run. I would not get out of it right now. SOXL is primed for a good day tomorrow, good day next week. Likely to hold. So anybody that's in those, get with it. Number one trade for tomorrow, in case you're not already in, I like Square, and I'm going to show you why. So not too much planning today. We're just rolling. Always pulling out the Stock Sherpa Almanac, or the Stock Trader's Almanac. I'm the Stock Sherpa. This is the almanac I use. It's actually made by another Joe Blow somewhere. He's trying to sell you stuff, but there is some great information in here. If you can just use the calendar for what it is, it's worth a purchase. You can buy it down in the description field. But today is the 10th. So what are we going to talk about today? The theme of the day is that in 2008, the second worst June ever, so the month of June that we're in, the second worst ever June was in 2008. The Dow was down 10.2%. I was in the business at that time. It was scary. Not a good time to be cutting your teeth as a broker. I got hired the month before that. No, I'm sorry, a couple months after, as a matter of fact. But anyway, I was there for the brunt of it. So June was a bad month. The S&P was down 8.6%. Only 1930 was worse, which you would imagine. The NASDAQ's worst June, the NASDAQ in 2008 was down 9%. If you're following me, you're better than that. If you're following the regular market, you're better than that. Anybody can do better than that in this market. And again, that goes back to the Fed. The quote of the day by Harlan Ellison, never heard of him. Apparently he's a sci-fi writer. But quote of the day today, coming from, again, the Stock Trader's Almanac, is the two most abundant elements in the universe are hydrogen and stupidity. I think that can go to speak to some of the meme stock information and stuff going on right now. But hey, you can call me stupid if you're profitable. I'm not in those. I mentioned that before, but no hate on the guys that are. All right, so CPI. What is CPI? A couple fun facts is what we're going to start. This is what people refer to when they refer to the Fed coming out with consumer numbers. The Consumer Price Index is what CPI stands for. You probably remember this from your economics class in college or high school. We've got our red shopping cart here, and this shopping cart, Bob Ross, happy little trees, we get it now. This shopping cart is going to be assembled of some goods, and the goods were picked like back in the 20s for what's in this, and they haven't updated it very recently. So just a couple fun facts on the basket of goods inside of the basket that measures the annual and monthly changes in consumer price index. Is pretty insane. This is why I don't really look at it as a true economic indicator, though it is an economic impactor. So when they say inflation is only 5%, it's way more than that. We all know that. But the measure that they use and base short-term interest rates to affect long-term interest rates. So that's what they are talking about when they talk about the Fed raising interest rates. They try to impact them through another method. I'll make another video about that. Let's get back to my shopping cart back here. So what's in here? We've got, this is supposed to look like a snake, and that is supposed to be the paramedic sign. So we've got medical costs go in there, but not the medical costs that you think. Prescription is not in there, but medical costs are. Bedroom furniture. So we got like a chair for the house here, right? We got our little house, that goes in there. Recreation, going out and partying, going out and spending money. Theme parks, I believe, are included in this, and that's actually one of the first measures. Toys are also in here, right? So we've got this basket of goods. We also have a gallon of milk inside of our basket there. We've got tobacco. Funny enough, a couple things that I think are incredibly funny, but also sad. Funeral costs are considered in the cost of the consumer price index. Cereal, that's also going to go in our basket back here. I'm tired of drawing poorly for you guys. Bob Ross left quick. Milk, cereal, tobacco, cost of funerals. This one's crazy to me. So this is why this doesn't really work anymore. The cost of admission to museums goes into the consumer price index and the basket of goods that they use. So anyway, I'm going to show you guys a resource here. Again, I like sharing information, whether it behooves me or not. So this is Market Watch. I pay for Market Watch. You don't have to. I do. I'll show you the good stuff from it. That's an ancillary benefit of being a bull. This is on Market Watch. If you click on Market Watch using an iPad or a tablet or your phone, you'll see this. This is this consumer. If you can notice here, oh, that looks so good. I didn't even plan that. We've got the CPI on the left side. So that's one of the consumer numbers. The second one is the core CPI. So the CPI is this basket of goods, right? That's what we're talking about. Right now, the Fed targets 2% inflation. That's the goal, is to have 2%. Right now, we're at 5. That's the number that just came out. In relation to what? Your advisor doesn't know this. Most of your managers don't know this or care to tell you this. I'm telling you this. It's very simple. It's an annual number. Last month, it was 4.2. Now it's 5. That's considered raising inflation, right? Inflation is a good thing. I'm bullish on inflation. It means that your economy is speeding up. Inflation that gets out of control is a bad thing because it increases the cost of borrowing, so you can't grow anymore. But anyway, back to the point. We are not at their target. This is the target inflation, and it was 1.8 over the last 10 years. So this is over the last 1 year. This is what they want us to be at, and then this is what we've been at. We've had very, very low inflation numbers because we haven't had as much growth as was projected from 2011 until now. Think about how the world's changed. We've had great markets, but there's been a lot of suffering. The 2008 housing crisis was just behind us. And 2011, if you remember, was the double dip recession fears. And then we had a lot of worries with China trade policy. Obviously a couple of wars and a couple other things going on over that period of time that don't get a lot of mention. And we've had very, very easy money policy. So it's not a surprise that we're at 1 and then now we're at 5. That is not out of control. This chart here shows that it's out of control. I'm going to tell you why that's important to how we invest. This is called the core CPI. This matters a little bit more. Not my favorite indicator, but still matters a little bit more. The consumer price index minus food and energy. The price of energy bills is in there. Gasoline is in there. Oil barrels are not. The price of other petroleum goods are not. Natural gas is not. So they are kind of not really a direct effect. And again, that's why I don't like it. If you read the article attached to this, you'll see a little bit about energy prices going up and down or gas prices going up and down. But anyway, the point that I'm trying to make here is that if we have 5% inflation, that means that's the price of goods going up. And then we have the price of goods going up versus our target here, our 10-year average. We're at like 3.8, 3 point something percent here. So from 5 to 3.8 is food and energy. Let's take those out. What else are people spending their money on? When those numbers aren't connected, that means things like discretionary items. Remember, things like technology, consumer discretionary technology, right? Those are what people are spending their money on outside of it. Restaurants, dining, travel, the whole bit. Now that we're reopening up, it shouldn't be a surprise that those are going to be places where people will allot their money. That's why I don't care about inflation. That's why I don't care about the numbers. And then that also shows us where the energy and food prices correlate. And remember that those have been all over the place. Energy prices went way down, but food prices went way up during COVID. There's all kinds of stuff that gets into this. But where are our portfolios allocated? That's what Ever Bullish does. That's what I do in the Ever Bullish One portfolio. So buy it if you haven't, or if you want to, you follow along with me. And this is the type of thought that goes into it. And you're learning from what I'm telling you. That's my agenda. Get with it. Also, the second thing on here is also pretty neat. This is the other numbers that came out today. These are called the personal consumption expenditures. So this is what I was talking about on what people are. So this is the price of said things, and this is where people are basically putting their eggs when they're going on spending. So you got the prices going up, and then you have the cost of money being spent going up. And as long as you have more here than you have here, you have what's called economic or market equilibrium. So that's probably a number that scares you too, from sweating over a test in 11th or 12th grade when you learn economics. But I love this stuff. You could probably tell. So anyway, personal consumption expenditure. The Fed target is at 2%. Right now we're at more like this time last year we were at 1.5. Well, that was mid-pandemic. I would expect that, right? Mid-pandemic numbers, June last year, and going all the way back 10 years has been less. So this is at 1.5. We talked about 1.8 being the average for inflation. That's a healthy level to me. I'm cool with that. Look over here, personal consumption expenditure a little bit lower, same thing versus what it was last year. So people are out there spending a lot more money the same way prices are costing a lot more. It's when these numbers disconnect in either direction that we're royally screwed. With that, how does that relate to our trading? You tell me. I love hedging my portfolio with consumer staples. It's a stable environment. It is milk and cereal. It is Band-Aids and toothbrushes. It is toilet paper. You got to wipe your ass and brush your teeth, no matter what the market is, right? I got in trouble at my last company for saying that, so I could say it here all I want with this company. Ever bullish, baby, the Sherpa, baby. The stock lesson that I'm trying to get across here is that when those numbers are not disconnected and they're moving in the same directions, I believe the market will continue doing what it's doing. That is why. And that's why we're in on SOXL. That's why we're in on tech. That's why we are in on Square. I'm in on Square now. That's why I love ERX. That's why I like LabU so much. All right. I expected this to go a little bit longer. I'm a little coffeeed up if you can't tell. And that's because 3 of my bulls out there, I appreciate you. You know who you are. Thank you for buying me that cup of coffee. I run on coffee. I'm putting up with some internet hate. And as an ancillary benefit, I'd love it if you bought me some more. I will work for coffee. You got to go to my website. You can buy me a hypothetical cup of coffee. If this helped you learn anything, give it a like, give it a subscribe, give it a share. I got a lot of financial advisors following me now. If you're not telling your clients this, level up or I'm going to take them. Chase Ever Bullish, the stock shorter on YouTube, the portfolio manager on YouTube. Chase at Ever Bullish on for podcasts on iTunes, Spotify, whatever podcast you use. I prefer IVFM. Go check it out. You'll be in the know pretty soon about that one. And this is not considered investment advice. This is a disclaimer that I do not provide investment advice. However, I am registered as a newsletter, which gives me the ability to tell you what I think is going on, and you can act on any opinions that you want to take because you're your own daddy. Chase Ever Bullish, LGR, AFG, LFG. Let's get rich.